Well, the market is roaring as we speak, but what's also doing very well is the commodity space. So let's go straight across to our commodities editor, Manisha Gupta, to find out what's brewing there. Manisha, hi, morning.
Well, yes, you have to say that it has been a very strong, sustainable rally that we have seen in the metal prices. Every dip has been getting bought into. You know, yesterday when I was doing the link, copper was trading at 595. We're back around 607 onto this one. 615 is an all-time high that the Indian markets have ever seen in case of copper prices. So the going has been quite well. And we are trading at multi-year highs, even as there's just less than a week to go for this year now. So copper prices back around those 8-year highs in the international markets. You have aluminum trading at a 2-year highs, zinc, nickel, lead, all have made 2020 highs in this month itself. So we have seen very strong buying continuing into this one. We have been talking about fundamentals where we have seen stronger economic data continuing from China. China is important when we talk about metals because more than 50% of production and consumption of many of these metals takes place here. For copper, it has been about the EV cycle, very strong demand that we have seen from infrastructure and the expectation that China, when it comes out with its 14th 5-year plan in the month of March, it will see more dependence on infrastructure, property, etc. We will see more stimulus coming in that way. And that clearly has been supportive. Nickel for the battery reasons, Tesla demand and the kind of supply disruptions that we've seen come in for Indonesia and Philippines has been quite supportive. And the markets do believe that with the kind of deficit that we're working right now may perhaps continue in the next year as well. For copper, let me tell you, 2020 was a third straight year of deficit. And the markets believe that until 2023, we might continue to see those kind of deficits. So if we are looking at 300,000 tons of deficit in this year, we perhaps are staring at the same figure in the next year as well. So while of course there is run-up in equities, we have seen cheap liquidity, stimulus may just about continue, weakness in US dollar are some of the macro fundamentals, but individual fundamentals for many of these metal prices also are supportive. So is the reason, even as we have seen this kind of gains in this year, where copper has been an outperformer, at least in the non-ferrous metal with nearly 38% of gains, markets are betting in case of copper and nickel. These two really have been the top contenders or the top metals that most of the banks and brokerages seem to be picking up. Let me tell you one thing, copper is trading at $8,000 per ton. Markets believe that $10,000 per ton is what we will see next year. All-time high for copper is $10,170. So this is one metal which really seems hot right now, and more markets seem to be betting on further gains onto this one. Trading strategies, and it's not just metals. We spoke to Angel Commodities and they have a buy continuing in case of gold, 50,500 for the rate today. And it's a buy coming back for crude oil prices also, 3,650 could be on charts there.
Thank you, Manisha. If you're elated with copper at 8-year highs, the Indian markets are heading for all-time highs. You wouldn't have thought when you heard of that UK strain, but now we're just 50 points off the Nifty heading a fresh all-time high, and 4 stocks in the green for 1 in the red. Nevertheless, I'm sure Chartbusters is going to bring you ideas on the bull and the bear side. Wrap up on Bazaar, and thank you from the entire team. Have a great weekend, every one of you.